In the United States, a hardworking middle-class family can easily pay 25% of their income in taxes. But in 2026, some of the wealthiest billionaires in the world paid almost zero. Most people think this is a conspiracy. It's not. It's a specialized system. They aren't hiding money in offshore accounts. They are placing it into 7 legal assets specifically designed by the tax code to grow wealth tax-free. In the next 8 minutes, I'm opening the vault on these 7 assets and showing you exactly how the 1% stays wealthy while everyone else falls behind. Welcome back to the Wealth Vault. The rich don't sell their stocks to buy mansions. Selling means capital gains tax, up to 20% or more. Instead, they use asset number 1, pledged asset lines. They take a low-interest loan against their millions in stock. Because a loan isn't income, the IRS can't touch it. They live off the bank's money at 4 or 5% interest while their stocks grow at 10%. It's a legal arbitrage that keeps them liquid and tax-free. Next is the holy grail of the American wealthy, real estate with accelerated depreciation. Through a cost segregation study, the rich can claim that parts of a building, like the carpets, the lighting, and the appliances, are losing value rapidly. They use these paper losses to wipe out their actual rental income and even their personal income. They collect a massive check every month, but on paper, they're broke. Most people use an HSA for doctor visits. The 1% use it as a stealth IRA. It is the only triple tax-advantaged account in existence. The money goes in tax-free, it grows tax-free, and if you use it for health expenses, it comes out tax-free. But the secret? The rich pay for their health bills out of pocket, leave the money in the HSA to invest in the S and P 500 for 30 years, and essentially create a massive tax-free pension. Asset 4 is private placement life insurance, a vault where the wealthy wrap their hedge fund investments in an insurance shell to avoid all annual taxes. Asset 5 is the opportunity zone. By investing in distressed U.S. neighborhoods, the 1% can defer their capital gains taxes until 2026 and pay zero taxes on any new profits they make in that zone for a decade. Finally, assets 6 and 7 involve moving the money out of your name entirely. Using irrevocable trusts and family 529 plans, the wealthy ensure their children receive millions without the government taking a 40% cut in estate taxes. They aren't just saving money, they are building a dynasty. The common thread? The wealthy don't work for money. They own things that work for them. If you want to stop trading your time for a paycheck, you need a blueprint. I've put together a passive income starter kit specifically for this channel's viewers. You can find the link in the description below. If you want to secure your family's future, start by unlocking the vault. Like this video if you learned something today, and subscribe to join the top 1%. I'll see you in the next deep dive.